What is up, guys? All right, so lesson one is what is forex, right? So the definition we're trading. So the forex is just an exchange. It's just the foreign exchange rate. All it is just the process of exchanging one currency to another, right? That's just a broad definition. But what we're doing is that we're actually trading currencies, right? Just like the chart that you see right here. This is actually trading view. I would explain everything later on how it works and how we use it, just to give analysis for ourselves for trades. So, like an example of us taking trades on Forex, right? I'm gonna just go scroll here to Euro USD, right? You're looking at charts. So this is how we could tell if this currency, Euro USD, is stronger or weaker, right? So meaning if Euro is stronger, right, we will start seeing candles push up higher, meaning that the value of the Euro currency is getting stronger, is getting higher against the dollar. Okay, just to put in those terms as a trader, if we see that the candle price is pushing lower, right? Because we can see the percentages in the side, the number, the rate, right? The rate of the Euro USD. If we see it pushing lower, that is showing us that the dollar is gaining more value than the euro currency. All right. So you people like to color code it, whatever it is that you want to do. You can use green and red. Green for bullish candles, red for bearish candles. So if we're taking trades here, right? So say that you want to buy euro. So say that you took a position here, and obviously it's going to be at the number around 1.08680, right? You're betting, right? You're trying to assume, you're trying to predict that the euro currency is going to gain more value than the dollar. So that's going to increase the price, and that's how you start gaining profits, right? So if the price, you take a buy position, so meaning this is just trading view, but you're going to see a buy and a sell position. If you take a buy position, you're trying to bet pretty much that euro is going to increase against the dollar. Okay, so that's how we look at charts for buyers and sellers. So this is what forex is. And if you're looking for sells, it's just going to be the opposite. So you place an entry at the same position, you're expecting dollar to gain more value than the euro currency. So it's going to push bearish, right? And the reason for that is, so there's two currency pairs. One currency pair is euro, the other pair is dollar. So euro right here is going to be the base currency because it's the first. So the base currency is always the first one. So that means if it's the base currency, that means if you're looking to buy that currency, you're expecting euro to get stronger because it's the first currency. So in the chart, if we're buying the base currency, we expect euro to be stronger. We're going to take buys. We're expecting the chart to push up higher. Okay. So now we're going to look at the secondary one, which is the dollar. So now the dollar is the quote currency. That's the second currency that we're trading it against. So that means put it here. This is the quote. So that's the second base currency. So that means we're obviously, if it's the second base currency, if we're looking to take buys on this pair, so that means the euro is gaining strength. And that would mean the dollar is getting weaker. So the euro is gaining strength against the dollar. So you could either, if we're looking at fundamentals, we looking at reasons that dollar, there's a reason for dollar to get weaker. That would still help push euro USD higher because the euro is getting weaker, the dollar is getting weaker. Okay. So we have the base currency, then we have the quote currency. So now if the dollar, just say that the dollar is getting stronger. If that's the case, because this is obviously the quote currency, like I said before, if the dollar gets stronger, that's going to push this pair down because now dollar is gaining strength and that's going to make the euro weaker. Okay. So that's how to simply put it in trading terms. All right. So the first currency is always the main one that you really want to, that you do pay attention to, because if you're looking to buy it, right, you're expecting euro strength. You're expecting euro to gain strength against the dollar. And if you are, you're looking to buy. Opposite. If you're expecting the dollar to gain strength, you're going to be looking to sell it because you're expecting euro to get weaker and dollar to get stronger. So then you'll be looking to sell it. Okay. So that's pretty much very simple. And then also, when it comes to base and quotes, you're going to have a lot of different currency pairs you could look to trade. So, like another one, you could look at something like a USD JPY. So now look at the difference. So the dollar now is the base currency. So if we're expecting dollar strength, which direction you expect this currency to go, up or down? Exactly, up, because the dollar is now the base currency. So if we're expecting dollar strength, we want to start seeing this pair start pushing up higher. Like an example down here, we want to start seeing dollar strength because we're expecting dollar to get stronger. So we'll be buying USD JPY because we're expecting dollar strength. All right. Now the opposite. If we're expecting dollar weakness, we're going to be expecting this pair to be selling. We're going to be wanting to sell it because now dollar is weaker. So we're expecting this pair to push lower. So we'd be expecting sales. Okay. So that's just to put it in simple terms. Sorry for that. Now look at JPY, because JPY now is the quote currency. It's the secondary currency. So when it comes to forex, we could trade two currencies against anything. You could also trade gold, commodities. You could trade gold against the dollar. You could trade gold against the British pound. Um, we could also trade US indices as a whole. Like we could trade, let me show you this chart. You could also trade US 30, even the S&P. So these I also focus on trading as well. I trade US indices, I trade gold, and I trade currencies. Okay. So the same thing in simple terms for current for equities. So if you want to trade US 30, let's see if you want to just trade S&P, because I know a lot of us should know about the S&P 500. So if you're expecting the S&P 500 to get stronger, you would just be looking to buy the currency. So you're going to be looking for buys, right? You're expecting it to go higher. But the fact that there's no base and there's only a base, right, is only the S&P, is only a whole. So it's not traded against anything else. So if you're looking to sell it, you're just going to be putting in a sell position wherever you want to take sells, and you're going to be pushing it lower. That's pretty much it when you're trading that. And same thing that goes with gold. Okay. So looking at other currencies, you could look at so we went over the dollar, we know it went over the pound. So you could also trade something like GBP JPY. So this is one of my favorite pairs as well. So the base currency is what? Which one is the base currency? So you should have got a British pound, because the base currency is the first one, the quote is the second. So that means if I'm expecting the British pound to gain strength, right? I'm expecting strength on GBP JPY. I'll be expecting it to push up. If I'm expecting weakness, I'm expecting the pound to get weaker. This pair will push lower, right? So now let's focus on the yen. So this is the quote currency. If I'm expecting yen to gain strength, right? Obviously, I'm expecting this pair to be pushing lower. If I'm expecting yen to gain weakness, this pair will be pushing higher. Right, guys? Hopefully this helps, and see ya in the next video.